is, why the market just doesn't seem to care about any of this.
That's my question to you. I'm actually like, why? Like for me, this everyone I speak to, every analyst, we're already live, yeah. Every analyst I speak to, it just tells me how unprecedented this is in many ways, and how it's impacted on multiple levels and multiple supply chains. And yeah, I look at the markets and look at oil and other commodities, and it just doesn't seem priced in. I'm not the expert, but I'd love to get your thoughts. That's a good first question.
Well, I think there's several factors why the market is discounting this. One is when they look at any of these disruptions, like Upcake in September of 2019, it was a non-event when the Iranians struck one of the Saudi fields. So a lot of people in these markets that have been trading them for quite some time, or more recently, over the last decade or so, have never seen anything of this magnitude. You got to go back into like Libya in 2011, and go back into the 80s and 70s to see something of this magnitude to really appreciate the potential impact it could have on the markets. But I think a couple of other factors more near term that are driving it is right now we are in a deficit, not a shortage. That means that demand exceeds supply, we're drawing our inventories, but we haven't run out of anything. It's like basically we are borrowing oil from the future to keep demand going. In fact, I liken it to that scene in Jaws where the mayor comes out and he goes, "Beaches are open." Yet you see the fins swimming around the shoreline, and you go, something bad is still in the water. And I think it's that the fact of the matter is you have really robust demand, everything feels good, you're drawing your inventories, but what happens when you run out? And I think that is within, in some parts of the world it's happening. Europe, it's probably sometime in the next month to month and a half. US, it's probably sometime in July. By the way, the stock draws in the US 2 weeks ago were some of the highest I've ever seen. And we look at, everybody goes, it was only 11 million barrels
Stock
last
draws, that's
week.
from the storage, that is the emergency storage
Exactly.
for oil.
Just by the way, the U.S. was a net exporter of oil. Let's remember, everybody talks energy dominance, but the United States is still short crude oil. It's a net exporter with the products, but with the crude oil, it is short. And for the first time since the 1940s, it exported so much oil over the several weeks ago that it's now a net exporter, and it's drawing down those strategic reserves, exporting them to the rest of the world, such that their refineries are going to have a problem. Look out in a month and a half, it's going to start to begin to bite. So that's one. And the other point is, you'll listen to most of the macro people. They're going to tell you, no problem, no problem. Oil is a very small share of global GDP. It has shrank. Now, I want to be careful about the state. I'm going to agree, relative to prices, the price of oil spiking just doesn't matter. But just like the magnets that went into the doors of Detroit cars as a price mat, they don't matter. But when China threatened to take them away, you would shut down Detroit because you don't have those critical minerals. Oil is the same thing. From a price perspective and a share of GDP, it doesn't matter. But you pull it out of the system, it matters. And the reason I bring this up is I like to emphasize the volumes matter. We in commodities, well, how do we quote things? We go millions of barrels per day, or millions of metric tons, millions of bushels per day. We don't quote in notional. Macro people quote in dollars. Financial people quote in dollars. And that is a very important distinction. And I remember, we go back, it was very similar during COVID. I remember we were going, you guys, you have a problem. You got a problem. It's coming your direction. Every commodity guy said, you got a big problem. Every macro guy, every finance guy said, oh, no, 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 no. Boom, inflation's up 10% year over year. And it's because they do not respect the idea of volumetric change. And I just want to give you an example like this. Let's say I give you $100 million and you give it to some rich guy. He goes to Tiffany's and buys one necklace, lots of diamonds on it and everything. Does it contribute to GDP? Absolutely, yes. The notional value be $100 million. Does it create any stress on the system? No, not really. Now let's take that same 100 million and give it to a bunch of low income guys. What are they going to do? They're going to go out and they're going to buy corn. And because then the volumetric impact it has on the economy is much larger. So notional $100 million is the same, but the volumetric impact is radically different. And, one of the key points that we made back in COVID is who has that money and who spends it determines what kind of impact it would have in terms of volume. And so when we think about this, people are going, we look at notionally, it doesn't really matter. I agree with that statement. It doesn't matter. It's small. But volumetrically, you pull it out, ouch. And I think that's what the world's going to learn sometime in the next, call it 3 to 8, maybe 12 weeks when we start to run out of these commodities.
Interesting. So the way they measure it, when they look at it notionally, they don't understand how significant it is. But when you start looking at it from a metrics perspective, volumetrically, then you start, that's a better forward-looking indicator, kind of gives you an idea of the impact it would have. That's a good example, by the way, of the diamond necklace and the $100 million versus corn, and necklace versus corn. So if this continues, if we see a blockade for another, let's say, 2 to 4 weeks.
Wait, I love how you say 2 to 4 weeks. Everybody has been saying 2 to 4 weeks since this started.
Yeah, exactly.
By the way,
exactly.
I just want to emphasize the Red Sea is still shut down 2 years later. It's only gotten back.
That's
it's
crazy.
Still down 75%. The Houthis are not as wealthy as the Iranians, and they have kept it shut for 2 years. So you have evidence.
That's
Why do
crazy.
you believe this one's going to open?
That's
Where do you
crazy.
get your 2 to 4 weeks? You just randomly pull it out of thin air, just like everybody else, like these investment banks that are out going, don't worry, it'll be over with in 2 to 4 weeks.
Well, what happens if what happens if the Red Sea one is interesting, because the Houthis are not attacking ships. They haven't attacked a ship for months now, I think since September last year, from what I understand. How is it that many ships still don't go through the Red Sea?
But would you risk it knowing they're still there? Would you, if you're providing insurance, would you let them do it? And by the way, let's be very clear. Why haven't the Houthis attacked? Have you ever looked at the flags of those ships leaving Yanbu? All Chinese. So, basically, I don't think people really grasp the idea is that, China is an ally of Iran. Russia is an ally. This is BRICS versus the G7, essentially. And when we think about, who's going through there, there's no Western flag vessels going through that area in the Red Sea. So part of the reason why is, hey, are you going to, let me ask you this as would you get as a crew on one of these ships and go through the main passage of the Straits of Hormuz in the next 3 months? One, probably not. If you're an insurance company, are you going to provide insurance for a ship going through there for the next 3 months? So let's say, I think we get an announcement out of President Trump somewhere around 1 p.m. Eastern time today. Let's say they make that announcement and everything's peace. I don't buy that's going to be the case. I'm not a believer that that's the outcome. But let's say that does happen. Are people going to get in these ships and start going tomorrow? Absolutely not. In fact, you want to be absolutely sure as an insurance provider, there's no guys sitting up in the caves up there with rocket launchers, drones, or whatever. You got to make sure there's no mines sitting in there. This is going to take an extraordinarily long time. So I go back to the point. We have one observation: Red Sea. It's still not open.
That is really bizarre. Like, if there is a peace deal between both countries, I'm still struggling to understand why ships wouldn't go through. And what are there's no alternatives. The world needs what comes out of the Strait of Hormuz. So I understand there's a risk involved, but it's not like there's alternatives. The Red Sea, there are alternatives. But when it comes to the Strait of Hormuz and the volume of energy that comes out of there, oil and gas and fertilizers, etc., there is no alternative they could replace it with.
I personally would not get in one of those ships and sail through there tomorrow morning if there was a peace deal announced this afternoon. And I think most of your listeners probably wouldn't either.
But during the tanker wars, from what I understand, ships kept going through the Strait of Hormuz.
Technology was radically different. There was no such thing as drones. Technology was not sophisticated back then. And now you have very highly sophisticated $40,000 drones that can sit, maybe launch from places up. I think it's important to think about the topography there. On the UAE side, it's flat desert. On the Iranian side, it's steep hills up in there. So the ability to hide this stuff in there, and also the IRG is incredibly fragmented. So you don't even know who cut the deal. So again, I'm the crew guy. I'm not getting on that boat. I'm the insurance guy sitting here in London. I'm in London, by the way. With somebody sitting in London, am I going to underwrite as Lloyd's, one of these ships going through there? I'm not going to, and I don't think they will either. I want to be really sure that the situation has stabilized. And I think that's one of the key issues here. And by the way, then let's say you've dealt with that problem, then you got to go and restart the fields that have been shut in. And so you're going to go there. I should point out, in COVID, we shut these fields down. How long did it take for them to come back on? 2 years to get it back up in many cases. And I like to point out, Iran in 1979, they shut in at 6 million barrels per day during the Iranian Revolution, only got back up to 4. And it took a really long time to get back up to 4. So, and then you got to re-drill it. By the way, as an investment recommendation, I love the drillers. Why do I love the drillers? You're going to have to go in there and start re-drilling these wells. In fact, I'm on the board of Board Drilling, who is going to be one of these entities having to operate in there. And so I really think if people are underestimating how much capex, how much spending, and also we don't know the damage. My bet is it's a lot worse than anybody has let on at this point.
Damage to their energy infrastructure, the Iranians.
By the way, just shutting a well. Some of these technologies are relatively old and they have high water cuts. So the question is, what kind of damage do you do when you shut them in? And then the question is, how much of actual physical kinetic type damage that they've suffered? We don't know the answers to those questions right now. What we do know, we know Ras Laffan is probably has big chunks of it that are likely to be out not for months, but years.
The Qatari one, the one that goes in Qatar and Iran.
Yeah.
I was reading somewhere, I'm trying to find the article. I was reading somewhere that Iran has found alternatives, and there was a detailed article in ensuring they don't have to shut down their wells. One of them is using old tankers to store the oil in the Persian Gulf. Number 2 is land-based routes. They kind of started to develop their own land-based routes, alternatives to the Strait of Hormuz. And number 3, slowing the extraction of oil so the wells don't have to be shut down. And a few other things that the article has more details.
Jask is another port they can use on the other side. By the way, they've been doing this for how long? They've been thinking about this for decades. And Iraq, there's a lot of ways for them, to get back. What I don't understand, that Bloomberg article that came out a few hours ago about that Iran pulled over that Chinese ship and it had Iranian oil in it. I don't understand why that was news and why they pulled it over, but it points out there's stuff moving. There's a lot of stuff moving. Just not American and Western flag stuff that's moving.
So this seems like great news. This whole thing is just a blessing for China and just terrible for the West. Is that fair to say?
100%. And because what does China make? They make the electron world. They make solar panels. They make batteries, EVs. They got 50 million units of EV capacity that's idle. They don't know what to do with it all. So this is almost like a blessing. And we think about the parts of the world that are going to get hit hard. It's going to be the emerging markets. When we think about COVID, the developed markets got hit hard. Here, the emerging markets are going to get hit hard. And who are going to be the potential buyers of all of this that China has to provide? It's potentially going to be the emerging markets. So when I think about, I think your point here is, it's a fine, delicate balancing act. But I think the other point is that people really didn't highlight was what happened over the weekend with orders 834 and 835, orders from the Chinese that essentially said, if you obey U.S. sanctions, you are in violation of Chinese law. They just went on the offensive.
Can you explain that further? That's the first time they do this, isn't it?
Yes. As part of it's one of these rare earth moments. It was in October of last year when they countered President Trump's tariffs with, guess what? We're going to cut critical minerals. They basically weaponized the periodic table. And once they do that, and there's like 22 of them that they had taken out. And then everybody realized, uh-oh, I need that magnet in that door to produce that car in Detroit. And now they've just done the same thing with oil. And remember, they have 1.4 billion barrels of strategic inventories built up. And they built another, according to the IEA, built another 40 million barrels in the month of March. So they've got a huge cushion.
In 1 month.
Yes. And remember, because their allies, Russia, Iran, and remember that ultimately what was Venezuela, I like to point out, you look at Russia, Iran, and Venezuela, they were essentially, I hate to use this word, colonies for China. China was the one funding and investing in these places and essentially taking all of the output of the commodities back into their country again. So when we looked at the balances, you take Iran, Venezuela, Russia, and then you take it relative to China. China is essentially, it's got the same energy dominance that the America does when you factor in its colonies. Now, it's lost the 800,000 barrels a day that it was taking from Venezuela. And it's probably not very happy about that because it pumped hundreds of billions of dollars into Venezuela for that production, which is why you look at China, it's what's really changed here. They went on the offensive. We're going to see what President Trump announces later on this afternoon, but I think actually for me it's in the afternoon. But I think the issue here is I'd be surprised if he actually goes next week because the situation in Iran hasn't actually improved that much. And also you look at China, they have become more aggressive.
There's reports now of clashes between the US and Iran as we speak in the Strait of Hormuz, according to Iranian media. Which goes to your point, like this is someone told me yesterday, one of my guests, like they expect this to become the norm. They expect this to, the clashes back and forth, which can highlight your point that it's not safe yet for ships to go through and traders don't understand the significance of the crisis. I want to go back to...
I want to be careful. Commodity traders understand the significance of the crisis. Financial traders do not understand the significance of the crisis.
I want to go back to Iran. So Iran, let me find it. Sorry, China. The US sanctioned five Chinese refineries for buying Iranian oil. China's response, a formal legal order declaring those sanctions null and void inside China and prohibiting Chinese companies from complying with them. This is the first time China has ever formally activated its blocking rules, a legal mechanism it created in 2021 specifically for this moment. The practical effect, banks, shippers, and multinationals operating in China now face two contradictory legal obligations simultaneously: obey Washington or obey Beijing. So that was a few days ago. And then yesterday, there was a report from Bloomberg that China's financial regulator has quietly instructed major banks to halt new loans to US sanctioned refineries with Iranian oil ties. So I was a bit confused when I saw that report from Bloomberg yesterday and then the initial report 3 days ago. Is China still not abiding by those sanctions and pushing back against the US? And how significant is this?
But I think I can't confirm this, but I think there was a threatening response out after 8:34, 8:35, which is what you're referring to from the Treasury Secretary Scott Bessent. Now, I think it's important to understand how these secondary sanctions work.
Bessent commented on this?
Yes, I think there was another comment in between that. But if I am China, if you secondary sanction something like one of these oil companies, it's not that bad. If you secondary sanction one of your banks, you got a problem. Which if I'm China, I probably would do that. So I think it's important to understand this is that the way they get you is through the SWIFT system. And by the way, China has its competing system, which is CIPS, which is cross-border interpayment system. It's still not, in terms of, SWIFT is the dominant one. The banks still have to finance, So if you think about like these refineries like Hingley, they got a ship that comes in there, the port, they don't want to touch it as it goes through there. They're willing to take that kind of hit through there. You hit one of your banks and you cut them off from the SWIFT system, you got a much bigger problem. And because you're going to have other bunch of goods going in and out, going to US, going to Europe from these different ports, the last thing you want is one of your big financiers getting taken out. So, a couple of ways. I think initially people go, oh, they're abiding by it. No, they're just playing safe at this point because you don't want it. But I think there was, by the way, if I was the US, once they did that, I would have countered with something pretty aggressive. And then, but the equivalent is, I'm China, I actually want to make sure that when these secondary sanctions hit, I don't end up shutting down, key exporting parts of the economy. And by the way, the secondary sanctions are a nuclear option here. They're hardcore. I remember I was at Goldman at the time in 2018 when Mnuchin used it against Russia for election tampering. And I remember that morning, woke up, everything shut down. Everything was a hot potato. You didn't want to touch anything. And even I think Mnuchin and Trump go, whoa, what is this thing? And then, by the way, from that point forward was the de-dollarization trade. From that, it was March of 2018. I remember that day so clearly. From that day forward, Russia sold down all of its treasuries. It was something like 94 billion. They replaced $40 billion of gold and $40 billion of physical greenbacks in case they had to actually transact in dollar bills. So they used the physical so they couldn't get hit with SWIFT. And then the big event was when in 2022, when Europe and the United States froze the central bank assets of Russia. It was roughly about a $300 billion freeze. At that point, China and the rest of the emerging markets were done with dollars. And so they started de-dollarizing, and that's when gold started its, epic ascent, going forward. So I think this is just part of a bigger de-dollarization story that I don't think it hasn't even ran its course. You look at gold reserves, they've got a long ways to go in China, to get up to levels of gold that would be equal to the reserves like many of the different Western central banks. So, that's why right now I'd be bearish gold. Given what's going on with the hawkishness of the central banks and the fact that you're going to have to sell. Actually, it was the Polish central bank said, I'm going to sell gold to pay for defense, pay for energy. So I'm short gold right now, but once the central banks turn dovish, I'd be locking and loading on gold, and the upside here is massive because this de-dollarization story is just getting going. And I would argue what you're talking about is just reinforcing it. And the question is, they're going to be looking at multinationals going, take your choice. Are you going to be in SWIFT? Or are you going to be in SIPs? Which basically is just reinforcing. We got a US block, a China block. And by the way, everybody was talking about that oil glut way back when. What they failed to realize is you have two supply chains. You got a supply chain based upon SIPs in China, and then you have a supply chain based upon SWIFT in the United States. And that other one's getting bigger and bigger.
SIP, who uses SIPs right now?
Most, like all of the Hengli and all of those anybody who transacts in sanctioned commodities uses SIPs. And by the way, it's not on global
Iran,
trading.
Who would it be? Iran,
Russia,
Venezuela before Russia.
Yeah. And roughly when you looked at it, last time I looked at the numbers, it was like November, October. It was small. It's like 2 to 3% of global trade. So it's still relatively small. But the point is it's growing. And events like what you're referring to with the counter sanctions by China by the way, that means they're going on the offensive and they're now getting aggressive. I think that is really the key message here. But the first point was last October when Trump hit them with tariffs, and they go, okay, we're cutting your critical minerals. Again, that's when they weaponized the periodic table. And by the way, immediately the U.S. goes, all right, truce. Let's give it 1 year. And the main idea was that the Americans were, we can get some of our own critical minerals away. Well, they haven't achieved that. And at the same time, the Chinese go, we'll take this year to readjust our economy to become more consumer based. They haven't done that either. So we'll see what happens. But both of them are buying that time to be able to smooth out their situation.
In a way, it's good to have them both dependent on each other as long as possible.
Yes, exactly.
That avoids
mutually
conflict.
assured destruction.
Exactly. Talking about the SWIFT and the SIFT, a lot of people are talking about this war in Iran being all about the dollar, or at least the dollar playing a role in that. And Iran was being, using the SIFT and being an alternative to the dollar and being one of the countries that is part of the de-dollarization process. Is there truth to that in your opinion? Do you think that played a role in Trump's decision to start this war?
No, I don't think so. It's too small relative. I think this was more by accident than by strategic planning, because I think the target was to take out the regime. I mean, that was take out the regime and focus on containing the risk of a nuclear weapon. That was the primary reason. That's what they state as being the. I'm just going to even goes. That's what they told you was the primary. So I don't think the dollar was there. And also, let's go back to what Bretton Woods is all about. Bretton Woods, which was signed in 1944, was centered around. It was called the Grand Bargain. The Grand Bargain was that the Americans, now with this dominant, huge navy at the time, which, by the way, they inherited from the British. And it's not the ships. It was all those islands like Diego Garcia and everything like that around the world, which, by the way, the British inherited it from the Spanish. So it's kind of the Western's navy. And they said, we're going to protect global sea lanes. And we're not going to be like previous conquerors and overtake you. We're going to give you money. We're going to protect global sea lanes, and we want you guys to trade. The only condition is you got to use the US dollar. And by the way, nobody used oil before Bretton Woods in World War II. The United States was 95% of global oil consumption at that point in time. And that's part of the reason why it won the Second World War, is because it was so dominant in energy at that point in time. So what was the most important commodity in Bretton Woods? It was oil. So I like to say that the dollar was the heart of the system, the U.S. Navy was the muscle of the system, and the oil was the blood that flowed through the veins of the system. And importantly, the stats that came out last week were the first one since 1944 where the United States was a net exporter of oil. And that's important because that period, from over that whole time period, the U.S. was a net importer. So it had an incentive to protect global supply chains because it had to move that oil into the United States. And so by around 2021, 2022, it became a net importer, exporter of products. So, the shale revolution we really need that deal anymore? So that whole point about dollars, I don't think is it. But I want to emphasize to Americans is that exorbitant privilege, that grand bargain, that the fact that the rest of the world uses the dollar provided cheap credit for Americans. I like to point this out. Right now, today, if you go to Switzerland, you can get a 30-year fixed mortgage for 50 basis points. Why? Because everybody has bought Swiss francs like gold to protect themselves. And when that strong currency gives the Swiss people the ability to borrow money really cheap, Americans get that exorbitant privilege. So now, if you go in there and you create an environment which you don't force people to use the dollar and keep the dollar as being the dominant reserve currency, it'll drive up the cost of everything in the United States.
But then the US is in a position now where militarily, which is their final leverage, their final card, militarily they need to ensure the dollar remains the global reserve currency. So won't we see the US enforcing that through military means?
Why do you say that? Economically, I agree with that, but not militarily.
Yeah, but because it's almost existential to them. It's existential to the American economy, especially with all the debt. So they're in a position where enforcing the US dollar as a reserve currency has become so existential that if it means militarily enforcing it, so be it. That's a worry long term.
But if it was military force, then why are they blocking the straits right now? It goes against the grand bargain. The grand bargain is what keeps the dollar as the reserve currency. And so if I'm Saudi Arabia, I'm Kuwait, and I'm UAE, and I'm Qatar, I go, hey, wait, I have all these military bases here. I signed up to the grand bargain, and I can't get my oil out. If you're doing that, you're going, hey, what am I going to do next? And I think the strategic alliances are going to get rewritten on the backside of this.
But those but those Gulf countries also don't want Iran controlling the Strait of Hormuz.
Right.
So that's
isn't the United States supposed to prevent you prevent them from happening? And also, and here's the problem with the U.S. military and its dominant position is we look at I'd argue this was bound to happen no matter what, because it was too expensive for the Americans to continue. And by the way, Stephen Moran wrote that paper making this point. It's too expensive to maintain the global hegemon of that dominant system. Now, it has a cost. If you lose it, you lose the exorbitant privilege. But we look at what happened, in the last, I think it was 24 months when interest rates went higher. Medicaid and Social Security are the number one line item. Number two is the interest payments, and number three is defense. So at that point, maintaining that huge military, but I know the Trump administration wants to take the budget up over $1 trillion, which I don't know how you're going to pay for it. But I think, the key point here is that's a really expensive operation. You need to have that dominant dollar position, but that dominant dollar position is driven by the fact that you keep trade open. Like, I want to point this out. When China moves a cargo of copper from Chile to China and Shanghai, it does because the United States protects all those sea lanes in the Pacific. So the United States is paying for that, but it better get the benefit that people use the dollar, keep their borrowing costs relatively low. So I think that these are really serious questions that have been brought up as the Americans have
to de-dollarize, someone needs to replace the naval power of the US to be able to enforce global trade along with the US. So that dependence on the US for global trade makes it harder to de-dollarize, no?
Yes, but
the
actually,
US is using selective enforcement now instead of enforcing
by the way,
freedom
actually,
of navigation everywhere.
Actually, somebody made the point is we always had a global hegemon since Waterloo, 1820, when the British knocked off the French, they became the global hegemon. And by the way, that's when carbon consumption started. They put coal on the ships, and they had this big navy they could run around the. In fact, the neighborhood I live in here in London was created around that time period. That's when globalization started. We had a hegemon since 1820 until now. And in the 1940s was when the British gave up the title of hegemon and gave it to the Americans. Actually, before then, the world worked with like the Dutch East India trading companies. Are we going to go? Because right now, China can't be a hegemon. Does the U.S. have the money to continue to be the hegemon? These are questions that need to be asked. And in fact, I have Chinese friends here that they sit on their phones, and they know where the position of the USS George Washington is. It's in Tokyo right now. The fact that they have it on their phones and know where it is they're going, hey, it has to sail to Iran. 10 days they got to consolidate the Pacific. And the fact, you look at the USS Gerald Ford, kitchen fire, sailing back to Norfolk. It's going to be in port for a year and a half. I heard. I'm not an expert, so don't quote me on that point. But the reason I'm bringing this up, the system is stretched. So the question of what are you going to replace it with? And actually, somebody made this point to me, and they're talking their book probably because they provide defense equipment, but they made the point. We go back to a world, is it like the Dutch East India Company where you have big state sponsored commercial entities? They have to provide their own defense on their ships, so they got drones and everything like that, and we're not trading in the dollar, we're trading in tokenized whatever, stable coins, or tokenized gold, tokenized silver. Yeah, I know I sound like I'm sci-fi here right now. That's not that far off from reality. No. So I think we're going into a new world. And by the way, I will say this is President Trump asked all the right questions. I don't want to get into debate whether or not it's the right answer, but I think these are issues they were percolating anyway long before this ever happened. And so when we think about the question. Because, by the way, the reason why this all happened now, interest rates went back to 5%. Interest rates went to basically zero after September 11th in 0203. I remember that's, by the way, we can get into finance and ROROs, and actually it was 04, risk on, risk off, because interest rates were basically zero. They stayed that way all the way until 22, 23, and boom, they popped back up into that 4 or 5%, and voila, now interest rates are above defense, and everybody's going, uh-oh, this is really expensive to maintain. And so those 0% interest rates just hid all these problems for about a decade.
Hid, but not solved. You can't solve those problems.
Hid. Very good point. Hid, but not solved.
You said something earlier, China cannot be that global hegemon. Why?
It's not big enough. It doesn't have the resource base. Also, the reason why the Americans, everybody goes, oh, you can replace, the yuan as being the petro yuan and it all works. No, it does not work. They are a net exporter and they're not a net importer. The United States imports goods and exports capital. And China is not that big yet, and it doesn't have that capability, and it doesn't have the consumer. Now, remember the reason why the U.S. needed that time and that truce on that tariff trade battle to basically try to get its own critical minerals. China needed it because it needs a consumer. By the way, neither one of them are solving their problems. And to get the consumer, by the way, I do wonder and ask the question, did the consumer, nobody's ever seen a consumer like the American consumer. Was it a function of the grand bargain, which gave them the cheap capital and the credit to go out and consume and do all this? The Chinese will never get that opportunity. I don't think the Chinese can create. Nobody's ever created a consumer like the Americans. So I don't know if the Chinese are capable of it. But the other point, too, is that Navy the United States has. Again, let's take Diego Garcia. The Spaniards got it way back when. And then the Portuguese, then the British inherited it from them. That's the West. This thing, that U.S. Navy just didn't pop up in 1942 overnight. A lot of it was developed by the West over centuries. And so when we think about China, it puts sand in the ground to try to create its own islands, So to say it can go out and be the hegemon overnight, I don't know. There's no way you could replace it. It can have a functioning bond market like America, the consumer like the America. It can't have all those ports all over the world like the British and the Americans did. It's inconceivable. But the problem is the Americans don't have the money to do this. It made sense in 1944 when the United States had all the world's production capacity, all of the world's military. Now we're 80 years past that, and that stability of that equilibrium that existed then doesn't right now. So ultimately, I think what the heritage of this Straits of Hormuz issue, I think it's going to turbocharge commodities, which we'll talk about later. But I think the bigger issue, it's going to rewrite global alliances. And I think what's happening is we're getting the world more dependent upon commercial or transactional alliances and less on strategic alliances.
Yeah, that's a very good point. Very, very good point. I think the Gulf has learned that the hard way. Europe learned it the hardest, and Asia's learned it probably the hardest as well. Now they need China. They need Chinese reserves. I heard that China is considering giving some of their reserves to neighboring countries. Is that true?
Yeah, they basically, as part of the way of doing it is they let up on the export ban, and so they're exporting to places like Philippines, Thailand, and those parts of Southeast Asia, because it's a fine line for them to balance. They kind of like this because they want to provide all of the electrons into that world. Because think about United States is a petrostate; it's a molecule state. Russia is a molecule state. China is an electron state, and Europe is an electron state. And so if you're building all the electron equipment, you want to make sure that these emerging markets end up being dependent upon electrons, not upon molecules.
So if we're going to see, you haven't mentioned multipolar world once. Why is that?
Because it's a bipolar world.
So just China and the US?
China, who even comes close to that? I say that Russia, Iran, and Venezuela are colonies to China. But so the Russia's not part of this.
India story. And Europe as a bloc, obviously they're lagging right now.
Europe, I don't know. Europe's the one I live here. I'm dual passport, American and British. I love Europe, and I do believe Europe will come out of this much stronger. But right now, it has an identity crisis. But the situation for Europe's the one it's like you talk about, not paying attention to what's going on around here. It was that day that Rosslafon got blown up. I remember I was at a dinner here. Mark Carney was visiting, and Keir Starmer and Mark Carney were over here jogging in Hyde Park. There was not one emergency ministerial meeting. I'm doing some talks here actually in Madrid here soon, and it's all about AI, not even about energy. Yet this is the part of the
AI
world
is energy.
Yes, exactly. AI is energy. AI dominance equals energy dominance.
Yeah, yeah.
And if you ask me, where is this disconnect coming from? And the disconnect comes from the fact that every policymaker is telling you, don't worry about this. And again, I think it goes back to that point I was talking about, notional versus volume. They don't they go, oh, it's small point, it's not going to matter. By the way, it was catastrophically bad for Europe in 2022. This is bigger than 2022 by a substantial magnitude. Why are they asleep?
Okay, so we'll cross Europe out. Not that I put it there anyway.
No, I can't cross it out. By the way, I love this part of the world, but it's just it struggles politically. And I think that, but ultimately, I think when you have a crisis come, how did America finally become 13 colonies and become the United States of America? It was through crisis, and I think that this crisis, this time and by the way, again, Trump identified the problem. Europe needed a divorce from the United States. Yeah, it's going to be painful.
The reliance, yeah. It's like if you have a loved person and you support them financially all their life, they become dependent on you. They don't build their own life, their own job, their own independence. So then, you thinking you're doing the right thing by supporting them financially, you're actually just sabotaging them. Or the old saying, don't give them fish, learn them how to fish instead, or whatever it is.
Yeah.
That's Europe. Oh, and India?
India,
I know it's early, but it's got potential.
It's part of the BRICS world. In terms of, that's the one thing about, the LPG is a problem right now in China. That's liquefied petroleum gas, because the Gulf was a huge provider. But if you're Russia, India is part of your alliance. Again, it's the BRICS. By the way, the BRICS, part of this too is, they never get consulted in anything. They're always been second fiddle to the G7. So when they look at this, they're going, hey, they want respect. They want to be included at the table. They want to be a part of the decision-making process. I'm not going to get in the politics. I don't want to go near all these geopolitics and these issues here. But I think there's a lot of issues that are driving a lot of this, going, hey, respect us in a way. And I think part of what goes with Iran, they just want the sanctions lifted. Do they really? If you listen to the older community, he never wanted to use the bomb. They use the enrichment in the bomb. They just want sanctions left and respect and be part of the broader world. Yeah. I don't want to get into geopolitics of this and anything like that.
This war upsets me so much, so unnecessary. So how bad could it get if this? I know you said if this blockade continues for 2 to 4 weeks, if this blockade continues, and we don't have a peace deal soon, and an opening of the Strait of Hormuz, which again, an opening doesn't immediately mean an opening. We could see clashes like what we saw just a few minutes ago again pop up. But how bad could it get for the global economy? Are we talking could it get to the level of what we saw in 2008, the financial crisis, or we're far from that?
By the way, the 2008 financial crisis was driven by too much private debt. That's just a different animal. And by the way,
very different. What I mean is that the impact on the world, not the same type of crisis.
But the situation here, if you ask me, if we were doing this 3 months ago, what was the story I would have told you? I would have told you the world is out of hard assets. I called it the revenge of the old economy. We've been putting all of our money in new economy, asset light. Why, like Mag 7, infinitely scalable at zero marginal cost. So all the money went into this. What do you want to call it? New economy, asset light, Mag 7. I'm probably missing another term. What I would have said is we've starved the investment that should be going into hard assets, low obsolescence, or HALO. Or heavy asset, whatever you want to call it. Or actually, I heard another one for hard HALO, which is hard asset local operations. They're all kind of the same story. Yeah. We know that. And by the way, it was working. By the way, I personally have that trade on. It's the great rotation. We're going to rotate out of Mag 7, out of all of those into these HALO assets. The pricing was moving that direction. We have to. How are you ever going to do AI? You need to have, you pound the table on? Buy copper, buy all, all of the, the turbines, the transformers, the grids, all of this hard assets. And then you needed military equipment here in Europe. You needed infrastructure. You needed all of these investments because they've been so neglected and ignored at the expense of new economy and tech since 2014. By the way, I want to remind everybody, in 2013 and 2014, you could not give Microsoft away. You could not give Google away. All they wanted was energy and commodities. If I could point out, I used to call myself in 2014, 2015, rock star turned wedding singer. I couldn't do anything wrong in 2013, 14, because everybody wanted commodities. And by the way, it was the end of the party. It was just like today. It looked, everybody wanted, people talking about energy companies, gold companies, all this stuff. It could do nothing wrong. And then 2014 happened, the bottom fell out of it, and we went into that tech boom. And by the way, historically, there's only two industries that matter: energy and tech. Either you got to turn the lights on and nothing happens, which is energy, or if you don't innovate, you'll never progress. And that's why we rotate. And you look at it goes from Exxon to IBM, IBM to Exxon, Exxon to Microsoft, Microsoft to PetroChina or Exxon. It just rotates back and forth. Right now, tech is at the top. And by the way, Exxon's lower today than what it was before the war started. So anyway, that was a story I told you that in this war happened.
How's that possible? Why is Exxon lower now than before the war?
People don't think there's a problem. They think the same thing you just said. This is over with in that's why I questioned you immediately.
But no, even if it's over in 2 to 4 weeks, that's not a good thing. 2 to 4 weeks is still a lot of damage to the economy, and the Strait of Hormuz doesn't suddenly become peaceful. So I'm saying as in like a peace deal is signed, but not the problem is over.
If you listen to all these people, they're buying equities like it's 1999. In fact, I feel in 1999, the NASDAQ, I think we were at 82%. That was getting to the end of that. By the way, how did that tech boom end? It ended with September 11th, the big geopolitical event. You rotated out a new economy into old economy. In fact, I remember it was in February of 2002, we coined the term the revenge of the old economy, because then you go, okay, we've been putting all of our money into .com, choking off the investment into old economy. By the way, it's the same story. You replace data centers with broadband. Everybody wanted energy. It was a exact same story. Then you rotated into the old economy. And also China, how did it come into existence? It came directly out of September 11th. President Bush at the time needed to use force in the Middle East, traded admission into the WTO for a vote in the UN Security Council to go use force. And boom, we're off to the race in China. So these big geopolitical events that occur typically sit in these rotations out of new economy into old economy. We're in the old economy boom until 2014, and then it ended. By the way, it ended in spectacular fashion. And so, I've been doing this stuff for 30 years. I lived through the one in 01, 02, and lived through it 2014, 15. We're in one of these big transitions right now today. But I think this one's going to be bigger than anything we've ever seen in any of our lifetimes.
And it goes back to something you started with, which I really like. I actually wrote it down. In this war, the US is drawing from the future, whether it's oil, whether it's increasing their debt, or the reputation, the relationship with all their allies. Short term, they've been sacrificed for American interests, but long term, it's going to backfire. And that kind of links to the 01 thing that led to China rising. So it could be very similar. But Jeffrey, I really enjoyed the conversation. I thank you for giving us your time.
Excellent. Perfect. Thanks for having me. It was enjoyable.
Thank you so much. Thank you. All right, everyone. I really enjoyed these conversations where I just learned something new. I'm sitting there listening and learning, and these are the conversations I enjoy. I'll be going live again in exactly 2 to 3 minutes with Aaron Mate again, a regular guest, to discuss the latest developments in Iran. So I'll see you soon.